Hi, this is Dee with Brown Girls Invest 2. I am coming to you hopefully very quickly because I wanted to cover a few things before an event that happens next week. Um, I am going to cover four things. So now the fourth thing, and pardon me, I'm going to be looking over here every now and then because I've got some notes. I don't want to forget something. First thing I'm going to cover is my February dividends. The second will be my March dividends. The third thing will be I got a question from someone asking if I ever sell any of my long-term holds. The answer is yes, and I'm going to show you what long-term holds I did sell, and I'm going to give you example. I'm going to show you why I sold them and give you examples of why you should do the same thing as well, or why you should consider doing the same thing. And then the fourth thing I'm covering is actually very important, so stay till the end. It is a conference that is happening that conference is going to affect quite a lot of things for years to come, and you may want to be involved in the technologies that they'll be covering. So first thing is my February dividends. Now I want to switch to showing you that. So give me 1 second here. We are going, there we go, right there. Okay. Think you can see it? You can. All right. So here's the summary for who paid me out in February. The first company was on February 1st. General Mills paid me $62.77. I'm going to speak about General Mills later in in the third topic, right? So keep that in mind, right? I made $62.77 from them. On February 15th, I actually got paid by four companies. One was Apple. Apple paid me $78.08. AbbVie paid me $284.85. I got $224.83 from Procter & Gamble, and Stag Industrial paid me $40.94. Stag Industrial is a REIT, and they pay out monthly, so that's why you'll see it repeated a few times every time I cover my dividends. And I have Wisdom Tree Dividend Growth Fund was actually a new pickup for me, and I'll again cover that in the third segment. This is a new company. This is a new position, that I've started with them with 150 shares, and they paid me out $12. Okay, that is February. The total for that was $703.47. And so because we're in the middle of March, I'm going to cover what I'm expecting for March. So this is actually, the March income will be $1,238.58. And so what I've already received is a payment from Visa, which was $24.40. Johnson & Johnson paid me $249.34. Applied Material, Microsoft, McDonald's, and Stag Industrial also paid me to combine $319.41. Home Depot, Qualcomm, QQQ, and XLK Technologies paid me, it's a technology fund, paid me $448.46. And actually that's coming up next week, the 18th through the 24th. And then to close out the rest of the month, BHP Billiton, Wisdom Tree Dividend Growth Fund. And this is a new fund for me. Both of these are. This guy here, these two. Wisdom Tree U.S. Quality Dividend Growth Fund. I started a position with them at 150 shares. And I started a position with U.S. Tech Breakthrough Multi-Sector ETF with 100 shares. They paid me $2.06. Now, I always kind of kid about this. I take 2 cents, 3 cents, 4 cents. I don't care as long as you're paying me. So those will be the dividends that I'll receive for the entirety of March. So that covers my first two segments. Now, give me 1 second. I want to switch over to the next thing. Okay, I got a question from someone asking if I ever sell any of my long-term holds. The answer is yes. And I sold out of the positions for particular reasons. I'll give you each of the reasons that I sold out of it, and why I decided to take profit, and why you may want to consider doing the same thing. So I think I have the document up already. Oh, I'm not sharing it. One second. I have to stop sharing this. One second, and then share. Okay, I'm not going to go in order here. And the reason is because the very first thing on this list, I actually want to cover last because it leads into my final topic. The first thing I'm going to cover is the fact that Qualcomm, I held Qualcomm since January 27th of 2021, which means I held it 3 years. And in that time, it's been down most of the time that I held it. And only within, say, the last 3 or 4 months did I actually turn a profit. Some of the gains that I made came in the form of dividends. So if you see at the very bottom of here is where I'm speaking of. At the very bottom, I purchased, I don't have the amount of shares, do I? That's dividend. Oh, that's right. That's a dividend. I initially purchased 39 shares on January 27th, 2021, and that cost me a total of $6,029.16. Qualcomm had been down, but no problem. So I held it, trying to see that if it would come back and if it would do what I was looking for it to do. I finally sold out of that position on March 13th, which was just a few days ago. And I partially sold out of this position because I want to redeploy this money. Again, I spent the $6,029 and I sold the entire position for $6,652, which gave me a profit of $623.31. $623 in 3 years' time is not a good risk to reward. It's not a good return on your money. It just isn't. So I think I can do better, and I will show you what I'll do with that money later. So that means I've recouped my money and made a little bit of a profit. So now I have $6,652.47 sitting as capital waiting to be redeployed. Okay. The next company was Google. I sold Google. Now, it wasn't a large position. This is, by the way, this portfolio that I'm selling this from is not, it's not my main portfolio, but I only had 14 shares of Google, right? And I purchased those shares for a total of $1,918.56. And I made a profit of $46.60. Now, I held Google for 6 months. That gave me a 2.45% profit. I expect larger gains than 2.45%. Now, the money that I recouped from the sale of this security, all I'm going to do is redeploy it into an ETF that is already holding Google. So I'll have exposure to it. I'm not worried about missing out on anything that Google is going to do. And they will be doing big things, by the way. So now I'm going to skip I'm not going to skip General Mills. I'm going to talk about General Mills now. I sold a portion of my General Mills position. Now, General Mills, I've held for a very long time, a decent amount of time, not very long. I've held this position for 5 years, and I sold a portion of my position. What I sold, I do have the number of shares. I sold 35 shares, and the reason I to pick that amount is because I was trying to get to a certain amount of money to redeploy, but I'll talk about all of that in just a second. So for those original 35 shares, I paid $1,620.85. I sold those shares for $2,290.73, which gave me a gain of $669. I'm going to say this this is for myself. I have different metrics for myself, and that is not meeting the metric that I want to meet. My the remaining portion of my General Mills, I have an 88% gain. Now, 88% gain over a course of 5 years averages out to 17%, 17.65%. Now, that's actually beating the market, because on average, the market will give you between, say, 10 to 12%. Either way, I beat the market with that position, and it pays me dividends. I'll tell you why I sold it in the next section, right? Or just a bit later. And so I also have this Celsius. Now, Celsius was only 3 shares. And the reason it was 3 shares is I was actually showing a client, giving a client an example of something. So I held, unfortunately, I had to hold it for 4 months to get my money back. I paid $172.79, and I sold it for $175.80, and that gave me a $3.01 profit. I take all profits. That is a 1.74% gain, and again, it was just a test, and I've recouped my money. Now, I'm going back up to the top, where we're going to talk about SuperMicro Computer. Now, I've traded, and when I say traded, I'm speaking about, I trade stock options, right? And this is not about stock options. I am just telling you that I've been trading it for, if I'm not mistaken, 9 or 10 months, okay? This is a company that has skyrocketed, and in my opinion, will continue to do so. Again, it's going to be related to the last segment, which we're coming up on that very soon. So I initially purchased 20 shares of SMCI. That's the ticker symbol for it. I purchased the 20 shares. I spent $5,377.80. And after it started to tick up in January, if you look at the beginning of like January 4th, up until say 3 weeks ago, it's kind of gone parabolic, if you ask me, right? So when it started to do that, and I noticed that market makers were starting to people wanted to get into this stock, so they started to knock it down. In my opinion, I'm not saying that's what was actually happening. All I know is that I've gotten into pretty good profit, and you want to secure your profit, right? See profit, take profit, right? So that's what I decided to do. So instead of me selling the entire position, again, it was only 20 shares, and those 20 shares were paid for from my trading of the stock, right? So I sold 5 shares from the 20. So I sold a fourth of that position, which the cost basis for that, meaning what I paid for those 5 shares, was $1,344, and I sold those for $3,299. And then the stock kind of ticked up some more, and then they started pulling back. Well, I didn't want to lose all my profit, because this company does not pay dividends, right? There's the reason that you would hold a growth company like this is for the appreciation of it. But if you lose the appreciation, you lost the appreciation. I don't want to do that. So I sold the remaining 15 shares with the intent of getting back in at another time. But again, that was always my plan to do so. So I sold those 15. And by the way, I bought this company first on July 11th. Sold the first 5 shares on February 5th, and then sold the remaining 15 shares on February 16th. Remember, I paid a total of $5,377, and in total, I received, I sold all of that for $17,448, and that gave me a profit of $12,070.95. That is a 225% gain in 8 months. Again, the average is 10 to 12% in a year, and in 8 months, I received 225% gain. I don't want to lose those gains, so you lock in your profits to secure your capital and possibly redeploy into something else. Okay, so those are the things that I did hold for. Some of them I held for 5 years. The General Mills. The next thing I held the longest was SuperMicro Computer, Google, Celsius, and I forget how. Oh, well, I'm sorry. Qualcomm I held for 3 years. So those are positions that I held for a decent amount of time and decided to take profit in. Now, I'm going into the very next and my last topic. Next week is the Nvidia GTC AI conference. The conference starts the workshops start on the 17th, which is Sunday, and the conference actually starts on the 18th, which is Monday, and it runs from Monday to the 21st, okay? Monday is the most important day because that is the day that the CEO and founder of Nvidia speaks, Jensen Huang. Jensen Huang speaks on March 18th. If you have an opportunity to get in position, which that is what that's why I freed up some of my capital. I want to sell something that's only making me 2.45% from Google or 1.74% from Celsius. I want to sell my General Mills that made me 17.65% in a year, right? But 88% total, because I know and I think I can do better. And I'll do better by redeploying that capital into companies like Nvidia, into companies like SMCI, and into AI focused other companies and ETFs. That is the reason why you would want to sell some of your positions. And I'm going to show you another reason why you should. So let me go to one other final shot here. Where do I have it? Oh, I know where it is. So I'm not going to use the trading chart that I normally use. I use Thinkorswim to do my charting, but I went here just because if you don't have Thinkorswim, I want you to be able to look up this information very easily. You can go to Yahoo Finance and be able to pull up a chart. I have this on a 5-year chart. Now, in part, my looking around here, I need to see what I have it on. Okay, so this is the reason why you would want to consider taking profit in things that you've held for a while if they are underperforming. Some of the reasons would be, one, for risk management, right? You want to take profit to realize the gains that you've made in that particular position. You want to secure that capital to protect it against any market downturns. Remember, I told you they started to pull SMCI down. The second reason you would want to do it is to optimize your capital. You can redeploy your gains into better performing investments and maximize your total return. Third reason would be because you want to take advantage of other opportunities. So other opportunities for me, where I was getting an 88% return, well, I'm still getting that on my remainder. I'm going to use that figure, 88% return on General Mills, where I could get, I think, a much better gain on an Nvidia or an AI or a cybersecurity focused stock, okay? And the final thing is you may want to sell to reach your ultimate goals. So I have certain goals, certain financial goals I hold for myself, and the moves that I am making, I'm actually rebalancing my portfolio right now because I've set different goals for myself, and I'm putting the things in place to be able to reach those goals. Now, I pulled up Square here. Square is now blocked, right? The ticker symbol is SQ. Remember, this is on a 5-year chart. Pardon my looking around, but this company at one point was at $275.10, and today it is at $81. So it's down here. It has eaten away. I'm sorry. If you had held the entire time over 5 years, you just wiped out your entire gains for 5 years. I'll give you another example of why you want to do it. And pardon this is bad. I shouldn't be doing this. 1 second. I can just do this. All right. Yeah. Here's another example of why you might want to sell and take profit. Tesla. Tesla has split 2 times in the past 4 years, I think. Tesla at a high, and by the way, this is the split price, $407. And today it closed at $162. So if you're closing at this level here, you just wiped out 3 years of gains if you held for that long. Here's one more reason why you might want, why you might want to. Zoom. Zoom at its high was $511. Today, Zoom is trading at $67. All right. So if you had gains in this, or if you had losses in this, if you had gains and decided to take your money, good job. But if you are still in something like this, and I'm not telling you what to do, I'm just telling you how you could possibly do better. Take the money from a position like this and move it into a company like an Nvidia. You see the difference in what the chart has done? So they've gone from a low of around $41 to it closed at $872 today. You can use an example like a Microsoft. Same thing. Microsoft trading around around $150 up to today closing at $426, right? And then you can use an example of Apple. The trajectory of Apple, same thing. At one point, it's trading at $75, and today it closed at $173. There are reasons why you would want to take profit on certain companies. If they are not paying you dividends, or if you don't have if you don't see something down the road or still believe in that company, and you want to possibly secure your profit, okay? That's all I got for you today. I hope that this was helpful to you. I hope that you learned something. And I do hope that you consider what I mentioned about that conference happening next week. If you got any value out of it, leave me some comments. Go ahead, like this video, share it with your friends, and subscribe to my channel. Thanks a lot. You guys have a great one. I'll see you in the next video, okay?